Hello and what is going on, lovely people of the internet? It is Who Money here with another video for you guys today. Today we're going to be talking about BBIG once again. Guys, things aren't looking too great for BBIG. It's acting very similar to support. We've always seen BBIG as the sympathy play to support.com. So it's in a very similar situation to the way that sprt was, and there's definitely some proof that some of these older shorts and shorts in general have been covering on this stock, and new shorts have been reloading into this stock. There's also proof that volume has been dying down, and interest in other short squeeze stocks have been dying down. And like I've said in multiple videos now, I do believe we are starting a bearish cycle in these meme stocks. So this is the point where if you're in some of these speculative plays, you can start losing lots and lots of money. So I make these videos to protect you guys. I get horrible feedback on most of these videos, but I'm literally only doing it to protect your guys and protect your guys' investment, because I know other YouTubers are probably going to be bullish no matter what. And even if this stock goes down to $3 per share, they're still going to be saying that they're bullish and that it's all hedge fund manipulation and whatnot. So I have to make these warnings literally for this reason alone. So I hope you guys do enjoy this video. If you do, leave a like on the video. Highly appreciate the likes. It's the #1 thing you can do to help me out here. So definitely leave that like. Also like to thank my sponsor, public.com. Public.com is an amazing stock brokerage, and they're doing a promotion where you get up to $70 in free stock as long as you deposit $1 on their platform. So check that out if you haven't already, and let's get right into this analysis. Alright, so as you guys can see, here's the chart for BBIG. It is looking decent on today's date. I mean, you know, with everything that's going on, a 1% gain isn't that bad. But if we take a look here, the volume is definitely dying down. There's an overall downtrend in that volume, and what really is forcing me into making this video is not only the data that I've seen on Ortex, which we'll get into in a minute, but it's really just turning into what looks like a bearish trend. You see this MACD completely converging. It's about to cross, and it's about to go into a red MACD. You can definitely see the volumes dying down. It doesn't look good from a technical analysis perspective, but we know that if you guys watch me on this channel, I never use technical analysis alone to make a decision. We'll look at support as well. Support was very similar to what BBIG did. Again, I've always said that BBIG was the sympathy play to support. Support had a small push when it was about to converge, so you guys can see right here on this chart, it had a nice little dead cat bounce, and then it came falling down. So there could definitely be plays to make money if you did want to scalp this. There could be a pushback to $9.60, but it also could dump off. So we'll do a few different things. So it could go up from here, right? And then it could come down, and then it might come up briefly again and then come down. I think that is definitely a likely scenario right there, but there's also other scenarios that could play out. It could continue to dump down to this 25 moving average right here, that pink line. Then it could see a small bounce, and then it can continue to sell off. I mean, obviously it could continue to go up as well. I can't predict the future, but I do think that the probable outcome is that it will continue to go down here. So this is my warning for you guys. It's still at $8 per share. If it gets down to $5 a share or $4 a share, I don't want to see people saying how much money they lost in my comments. So this is my warning to you guys. Again, I could always be wrong. These are just my opinions, so I encourage you to formulate your own by doing your own research and due diligence on top of what you see here in this video. But this is what I see, and I'm personally not going to be buying into BBIG because I just see a lot of risk. I mean, in these short squeeze plays, there's always the opportunity to make 100% gains, but typically when we're seeing a stock like BBIG that's already up a lot and it looks like it's about to turn into a downtrend, the typical trajectory is a 50% loss if you do continue to hold on to it. So definitely do be careful. All right, so here is the short interest data. We have 18 million shares that are currently being shorted. The cost to borrow is 73.81%, so they are paying a lot of money to borrow this stock, and then 25% of the float is shorted. I think this is honestly the most overrated metric right here. Short interest percentage of free float is not what you want to see. I think current short interest is more indicative of a result of a short squeeze. So we saw that 3.2 million shares have been borrowed as of today, and then 4.4 million shares have been returned as of 2 days ago. So we are talking Monday. That's when these shares were returned. The utilization rate is coming down from 99.67% down to 94%. So there are definitely some shares available to be shorted. The days to cover is currently at 0.65. So this is definitely a big risk. That is a low days to cover. That means that shorts can definitely cover this stock fast. There are plenty of people that are willing to sell their shares to the shorts so that the shorts are able to cover. So it won't really create a huge jump in price even if shorts did cover. And this is another thing that a lot of people do miss when analyzing these stocks. So anyways, back to the returned shares. We did see 4.4 million shares were returned as of today. That means that if these shares were short covers, they would have covered on Monday. So these are 2 days late. There's a T+2 settlement date for returned shares, and we can also bring this in to the graph right here. You can see we have charted out the returned shares as well. So this was on Tuesday, representing last Friday, there was 5 million shares. Then Monday, representing last Thursday, there was almost 7 million shares. Then it drops down to about 2 million as of last Friday, which would signal that on Wednesday, they returned about 2 million shares. So let's just jump to the peak right here. We can see that 6.9 million shares were returned as of Thursday last week. So we're going to go back into the price chart. So going back to last Thursday's trading day, where 6.9 million shorts did cover their position. So about 40% of the short interest was covered as of last Thursday. And as you can see, the only real effect in price that it made was about going from $10 per share to about $11.29. So that's only about a 10% increase for 40% of shorts covering, and there's literal proof that 40% of shorts covered. So taking into consideration T+2, we have to look at Monday, September 13th to get an estimate of what the actual short interest was as of last Thursday, which is when most shorts did cover. We can see that about 6.9 million shares were returned out of 18 million estimated short interest. We take out our handy dandy calculator, we do 6.9 divided by 18 to get an estimate of how many shorts actually covered, and it was about 38% of the shorts covered last Thursday. And as you guys can see, this was the price movement from all the shorts covering. And this is why I say the days to cover, if the days to cover value is very low, and we've seen this in support, we've seen this in BBIG, a short squeeze, getting shorts to cover is not going to be what sends a stock like this to the moon. It's more so momentum, it's more so sentiment, and other YouTubers are not going to say that. They're going to say that it's hedgy manipulation. They're going to give the entire speech about making these shorts pay, but I just showed you guys proof that about 40% of shorts covered last Thursday, and the only effect on price was about a 10% increase on that day. So rather than seeing these stocks as epic short squeeze stocks, you have to start seeing them as momentum plays. You have to start judging them based off of sentiment and not based off of short interest. I know it sounds ridiculous, but it is just the facts, and hopefully I can help you guys understand this as you guys continue to watch my videos and I continue to explain these facts to you. So anyways, my thesis is that this is a momentum play. As we can see, the volume is clearly dying down. The MACD is converging because of that volume dying down and the price also coming down. So I do see more downside in this stock, even if shorts do cover, because the momentum, the sentiment, etc. is heading in the downwards trajectory. I'm not recommending that you short this stock. I'm not recommending that you buy puts on this stock. I'm just saying that if you do own this stock, consider having stop losses to prevent your risk, because it could definitely drop 50 to 80%. We saw support.com drop to equivalent values of $5 per share, which is lower than it was before the short squeeze. So if we look at BBIG, that could go down to even $2 per share if something similar to support.com happens. Now obviously this stock didn't complete their merger yet, so there hasn't been a true sell the news event yet with BBIG, but there is still the risk of going down. I think $5 per share, or even that 25 moving average of 5.84 would be the next place that we do see a bounce, and it definitely can go even lower to this 200 moving average of $3.26. So just keep in mind that there are risks involved with buying this stock. Now, on top of this, and the reason why short interest is still pretty high on this stock is that as soon as these shares were settled, they were re-shorted by other people. So the day that had 6.9 million shares returned also had 5.9 million shares taken out on loan. So as soon as those shares were returned, as soon as that utilization dropped, the new shorts piled back in and continued to short. And the same thing the next day. There was 5 million shares returned as well as 5.8 million shares newly shorted. And you have to remember that these newly shorted shares got in around this box, so they could have gotten anywhere from $9.45 all the way up to $12.77. So this new squeeze out of the new shorts wouldn't really happen until we get some positive price action back into the $9.50 range or above, because currently those shorts are profiting, so they have no reason to cover their position. So I'm going to assume that they're going to hold on to their positions. I mean, short sellers typically are pretty greedy people. They're probably expecting a price drop even more. So yeah, for this play to be back on the table, it needs to break back above $9.50 per share at least. Probably even higher, probably $10 to $11 per share. So like I've already mentioned, I'm not going to be buying into BBIG. I don't own any BBIG currently. I did play some options on this initial run up. As soon as we saw support go crazy, that's when I bought options on BBIG because I knew it was the sympathy play. And then I also got a whale alert around right here on 831. And I played options again on BBIG and I made some quick money, but I got out of this one quickly. I secured a quick 100 or 200% options of profitability, I think even more for some of them each time. I made sure I got in and out to manage my risk, and at this point the only thing that I can really see is that you can scalp it on the way down. Like you guys can see right here, there's a quick bounce from 8.1 all the way to 8.5, but still I think it'll see some resistance off this 200 moving average at 9, and I think overall it will go down. So if you want to like scalp this play for some quick flips and quick profits, that could be a good idea, but I don't know how I feel about holding this one at this point. Anyways, that's about it for the video. I hope you guys have enjoyed. I hope you guys learned something as always. I know a lot of people are in pain today because of what happened with sprt.com, and I told people to sell out of that one about a week and a half ago. This is my final warning for BBIG. So if this one keeps going down, that's your warning, guys. I'm literally putting it right in front of your face right now. In my opinion, this is not the asymmetric risk to reward play that you are looking for. I think there's a lot of added risk right now for the amount of reward that you can get. The only real way to continue to squeeze out shorts continuously is to get new shorts to not want to become new shorts. If new shorts are piling in at elevated price levels, they have so much more leverage, right? So a true short squeeze play would be a play where new shorts just don't get in. In a lot of these situations, we see new shorts pile in as soon as those return shares settle. So rather than squeezing out shorts, new shorts come in, and they're very happy to come in at those elevated price levels. The new shorts don't have a cost basis of $2 to $3 per share for their short positions. They have a cost basis of $9 to $12 per share. It gives them more power, and we cannot ignore those facts. In a true short squeeze play, new shorts will come in, but they will continue to get squeezed out because of a different catalyst. So we'll see what happens with that. I hope you guys have enjoyed the video. I enjoyed making it as always. If you guys don't mind leaving that like on the video, it's the #1 thing you can do to help me out here on this channel. Subscribe for more, hit that bell, pound that like button. Let's get this rally going. Big shout out to Public for sponsoring me on this channel. They're doing a promotion where you get up to $70 in free stock just for signing up and depositing at least $1. It's an amazing app. You should definitely check it out if you haven't already. And yeah, guys, that's about it for the video. I hope you guys have enjoyed and have a wonderful day. Peace.